Thank you, everybody, for joining us today on the webinar. I am Allie Stevens with the Florida SBDC at UNF. Thank you. We are with the esteemed panel here of professionals in the field for our payroll protection program. Now that you've got the money, what's next? I just want to give a couple housekeeping items, and then I'll hand it over to our moderator. Questions, we are asking that everybody save your questions for the question panel. Type them into the question section on your control panel, and we will address them at the end. We realize this is a hot topic and there's a lot of attendees today, so type them in and we will address them at the end of the presentation when we have time for Q&A. Be on the lookout for a survey at the end of the session today that will be sent out. We appreciate your feedback, and opinion matters to us. And also, everybody who has registered will get a link to the recording and any resources that we may cover in the course of the presentation. So with that said, I'm going to hand it over to Nancy Boyle, Director with the Small Business Resource Network, who will be moderating the panel presentation. Take it away, Nancy.
Okay, thank you, Allie, and welcome everybody. This little webinar is being brought to you by the Small Business Development Center at UNF and the Small Business Resource Network program, which is a network of accountants, attorneys, bankers, commercial lenders, commercial insurance agents, and various other commercial enterprises that serve the small business community. So without further ado, I'm going to go ahead and introduce the panel. Unfortunately, due to some firewall issues, one of our panelists is joining via phone. So you can see her lovely face on the slide in the background. So I'm going to start with Janine Malanke. Janine is Senior Vice President at American Momentum Bank. She has over 30 years of banking experience, and she specializes in SBA 7A, Express, and 504 lending. Janine has been a top SBA lender at American Momentum Bank for the past 2 years. She consistently closes $15 million annually in SBA loans. Prior to American Momentum Bank, she was at SunTrust. She is a member of the Small Business Resource Network, as are our other two panelists, and works consistently helping the Small Business Development Center and their clients. She's been a guest speaker at the Jim Moran Institute of Entrepreneurs and the University of Florida Veterans Entrepreneurship Program. Janine is a Jacksonvillian. She went to high school here. She attended college at FSCJ and Jones, studying business and accounting. Next, I'm going to move over to your left of the screen, Miss Lori Lee. Lori is a former history teacher who decided to go to law school. And so she studied business law and had been practicing for about 12 years before she opened her own firm called the Legal Department. And Lori serves small service-related businesses throughout the state of Florida. She's a graduate of the University of Florida Levin School of Law. She graduated with honors. She was awarded the SBA's 2019 North Florida Women-Owned Business of the Year, which recognized her work supporting and advocating on behalf of small businesses. She is also an AV preeminent, peer-rated by Martindale-Hubbell attorney. She's a member of so many organizations and does so many volunteer things that I'm unfortunately not going to have time to read all this. And last but certainly not least is Adam Robinson. He is the managing partner of Hartman, Blitch, and Gartside CPAs, which is a local public accounting firm that has been in the Jacksonville community for over 50 years. Adam has over 30 years experience working with businesses and nonprofit organizations, and he provides them with accounting services, which includes audits, reviews, and of course, the ever-loving tax services. Adam is also a Jacksonville native. He is active in the Chamber of Commerce with the Small Business Resource Network. I think both Lori is our current president. Adam is one of our past presidents for the SBRN. Adam also is a teacher, like Lori and like Janine, and he has taught accounting classes at Florida State College as well as Jacksonville University. Adam is a graduate of the University of Richmond and has an MBA from the University of North Florida. So as you can tell, we have some very experienced and credentialed presenters today. So what I'd like to do is open it up and start with Janine. Janine, as a lender, perhaps it would be a good idea for us to start with the PPP funds. Okay, theoretically, everybody on the call has gotten their money, and now it's like, OMG, what do I do to make sure I can get this loan forgiven? So let's talk about what you can and cannot spend this money on, okay?
Okay, that sounds like a good starting point. And as everyone knows, all of this falls under the CARES Act. And under the CARES Act, the PPP or Payroll Protection Program was set up to help businesses obtain money to retain employees. So therefore, it was focused predominantly on payroll. They also allowed in the simple 2-page application the ability to spend part of this money in order to be eligible for 100% forgiveness, that you could spend up to 25% of this money on things outside of your payroll costs, which would include interest on a mortgage obligation that you had in place before February 15th, rent payments that you may have due on leases that were in place before February 15th, utility payments that were also under service agreements before February 15th. And by documenting all of these items and how you spend your money, you can apply for up to 100% forgiveness of this loan. All the banks have been working diligently and very hard to get as many of these loans through their processes as possible. I know there was a lot of noise for people regarding what banks to go to and how and where and why. There were compliance and other identification requirements for the banks. So therefore, a lot of the banks focused on their clients first because they had cleared compliance for those particular people. But now there's so many places that you can still go if you haven't, or you know somebody that needs a PPP loan to get it. You can still apply till June the 30th, month before the program ends. So to focus on the PPP forgiveness, we're waiting on the interim final rule from SBA in writing. That's been one of the frustrating things for everyone involved in the program, is that we put the program out and then we get follow-up guidelines and guidance. So we have to kind of today follow the facts and the certifications that we applied for, the notes that we signed, and then move forward to document, and we'll have final guidance either today or Monday is what they're hoping, on how the banks will process that forgiveness piece back to the government for you. So I'll kind of stop there and let you guys chime in and see what you want to talk about next, unless you have something else you'd like me to cover.
One of the questions that has come up quite a bit is about the 8-week time period. When does it start, and is there any flexibility in that? And Janine, can you address that? Because I think that's confusing for a lot of people.
Yeah, the 8-week period is called the covered period. So if you see any language or read anything that keeps calling back to the covered period, the covered period starts when you received your money. So when the bank deposit, you signed your documents or sent them back by DocuSign. When you sign those documents and send it back, they then disperse the money from the bank, and it's actually the bank's funds, into your account or to an account designated for your business. And that's called the covered period. And that covered period clock started on that date. So if it was April 21st, the 8 weeks started April 21st. And then you've got 8 weeks in your covered period for that management of payroll and expenses that are eligible.
And does the payroll actually have, and this may be an Adam question as well, does the payroll have to be paid during that 8-week period, or can it just be sort of on the books and maybe it's paid after the 8-week period?
My understanding is that it's to be paid, that it's based on money leaving, the expenditure. So it's based on paid. So that becomes problematic when people have biweekly payrolls, or they pay monthly or twice a month. So the important thing is you want to really have the payroll represent 8 weeks of pay and have it paid. So I've actually recommended to some clients, if they're on a payroll system and if your money comes in the middle of your payroll period, you don't want to lose that last payroll being paid outside the 8-week period. I'd rather be safe, and I know payroll companies such as Paychex and ADP, if you have them, they will process additional payrolls, and it's probably worth it to just make sure you pay it during that pay period. The only thing that I'm aware of that you can accrue is retirement expense. So as if you have a company and you match an employee's, you put aside so much for their retirement. If you have that, because normally that's paid sometimes annually, you say, well, I'm going to set aside 3% of everyone's pay during the period. That was the only one I'm aware that would be sort of an accrued expense that you would just document.
So Adam, go ahead, Janine.
Do you have, Janine?
Yeah, I would agree with those statements exactly, because the healthcare contributions and the retirement certifications are technically separately run reports. So you know what that amount is typically accruing. Even if it's an annual amount, you can break it out for the 8 weeks and apply that.
Right. And the health insurance, make sure it's the net amount of the health insurance. So you may pay $3,000 a month to Blue Cross, of which your employees are paying 1,000 of it. So the net cost to the employer is only 2,000. So just don't grab your invoice from Florida Blue and say, oh, here's my number. Because if your employees, which many are, they pay a portion of it, you're only getting you can only take the amount that you as the employer pay.
Adam, what do you suggest if, if people are on, say, the every 2 weeks pay schedule and their money comes in the middle of the payroll, as far and then it's going to end sort of in the middle or the end of the 8-week period. What is your suggestion on the best way to account for that, to make sure that, since you can only use the money when it goes into your account, that's your 8-week clock starts ticking then,
right?
To adjust for the sort of the differential in the dates?
I would actually run a special payroll. I actually had a client that was being paid. They paid on the 15th and the 30th. And the way, no, actually, I'm sorry, they paid monthly. And I told them, go to ADP and run a payroll middle of the month, because they were going to miss out. And that's usually, most employers are usually bi-weekly, occasionally weekly. Those are fairly simple. You can still run into an issue, though, depends on when you get funded for even every 2 weeks. So the payroll companies will work with you, because obviously you want to maximize that, and it may cost a few $100s, but you don't want to miss out and have it roll, fall on the back end. Until we get good guidance, I'd be conservative, make sure you said, well, the money left, and that's what they really want to see, is that the money is left to pay payroll. This accruing thing, you could get really sort of an issue, because you can say, well, yeah, I'm going to pay that. It's just not as definitive to say I'm going to pay, and you miss out on the 8-week period. Janine, how are you all going to look at that from the bank standpoint?
Well, I agree that with the same concept, because like when I put out money, for instance, on that April 21st date, some of that payroll that was already accruing, maybe they normally paid it on the 24th. So my clients immediately switched over an ACH to their payroll company and sent the money from that account, so they could document they submitted that payroll for the 24th, and then they'll provide that 24th payroll record. And the payroll companies have been great about it, and they know this program, and they set up their programs and their formulas really quickly in order to gather these reports for the clients.
I also believe QuickBooks is rolling something out to help for people who have run their payroll through QuickBooks. I've seen some of that come along, and I do think that there is some debate on this. I've been on some webinars where the debate is, if you get the money in the middle of the payroll, can you still pay for the week before you get the money? because I think it's accrued and due during that 8-week period. But if it accrues before the 8-week period, but due during the 8-week period, there's some question about, and I think that's what Nancy's question really spoke to. And I think that I've heard both sides of the coin on that. I've heard that people say, no, it's what accrues during the 8-week period and is paid. But the stronger argument, I think, is that it's paid during the 8-week period on your regular cycle is paid. Because I do think that it's difficult to get bills that are due and paid, because like Nancy said, they could accrue during the 8-week period, but they're not yet due until after the 8-week period ends. So I think there's some timing on that hopefully some guidance will come out on, or maybe not, and it's just going to be an interpretation issue.
Yeah,
and I think it's heavily weighted, but it's heavily weighted on that borrower certification that they did bring people back, put them to work, and that they're paying them, so that all that counts and the clients can certify to that. And by certifying to that, then I think you can see that even instead of splitting hairs, you could try to work with the clients on things like that as best you can if they're certifying.
Yeah, Janine, will you maybe go over that a little bit more? Because, you know, when we talk about, this is something that's a little bit confusing for people that I've been getting some questions about, and that is, you know, 75% spent on payroll and then 25% spent on these other qualifying costs. But even if you meet that, it doesn't necessarily mean you're going to be 100% forgiven, right? There's other criteria.
Yeah, let's look at the criteria, Janine.
Yeah. On the formula itself, the way that it was put together, being 2.5 times the average monthly payroll, it should work most of the time because you only have 1/2 of 1 month's payroll left to spend on other expenses if you paid payroll for 8 weeks, which would be your other expense money.
But when you just mentioned, like if you've reduced your staff, let's say if somebody's had 5 employees and now they're down to 2, isn't there, even though they may have spent the money appropriately, isn't there like a forgiveness reduction if you don't have the number of full-time equivalent employees? And then there was another dollar for dollar reduction if you reduce people's wages and things like that, right?
Yes, there is potentially, but a lot of those things are the things that we're waiting for in the final rule to see if they're going to provide a tool or a form that's completed by the borrowers in order to show how they did that. You know what I'm saying? So right now the banks are working off of general guidelines until we get that specific guidance.
I think that's a good, you know, time to chime in and make sure people understand that what we're saying now is really the best information we have at this point in time, and things continue to change. And I was on a webinar yesterday with the Florida Bar, and we had 2 Miami finance attorneys and a CPA and a banker, and it was an hour-long CLE. And at the beginning, they told us one thing, and by the end of the CLE, before the hour was over, they'd gotten notifications on their phone, and now all of a sudden there was something different and they had to update it. So things have been changing so quickly. And as we wait for these rollouts, you know, some of this information is a little bit fluid, and I just want to make sure people understand that, you know, we're giving general guidance based on what we know now and what we're thinking our best guess is going to be, but it could change as these guidelines roll out.
Probably will change. I want to address an issue because I think there's confusion around, all right, you're getting your PPP money, 75%, in order to be forgiven, 75% of the money that you receive must go to payroll. You must have the same head count when you're making these payroll disbursements that you did in your application. And then 25% is available for you to use for mortgage interest, rent, or utilities. So the question frequently will come up is, okay, but I'm not going to be able to spend all this money on the 75% payroll and the 25% other stuff. So let's just say, as an example, somebody gets, I'm using round numbers because they're easy for me to do math. Somebody gets $100,000 in PPP money, and they can spend $25,000 in their mortgage interest, their rent, and their utilities. Okay, so let's say they meet that criteria, but let's say they're only able to spend $60,000 in payroll. You know, they brought the right number of people back, you know, or they replaced people, so they have the right head count, but now they're only able to meet the obligation. Well, let's say 50%. Okay, so that leaves 25% of the funds that you're not spending on the eligible amounts. So what confuses people is that that other 25% that is ineligible for forgiveness, you know, what do I do now? And what does that become? So I'm going to throw that to Adam and say, Adam, okay, now that I've accounted for everything, my T's are crossed, my I's are dotted, I'm eligible for 50% in payroll, 25% in the other allowable things. So what happens to that 25%?
Well, that's a good question, because my interpretation and what I've read is that of the amount, 75% needs to be spent on payroll and 25% on others. So if your payroll number was half, then I would think that your proportional 25% would be reduced by half.
Okay, Janine, you want to weigh in on that as well from the banking perspective?
Howard?
Well, and I agree with Adam, and you know, since we don't have the detailed guidance regarding the calculation of the forgiveness from the program guide, it's really hard to say what else you would do. You would just have the balance on your loan if a portion of your loan is not forgiven. And
Okay.
then you'd have to address that with your bank. There's also, you know, the interim rule was silent on specific forgiveness processes, but the statutes say other things. And in the statutes, there's also mention of unless employees are rehired by June 30th, the end of the program. So there may be some other flexibility that comes out regarding those certifications on rehiring as well to be eligible for full forgiveness. But until those come out, which are due any time, I mean, it's a little difficult to get very, very specific. And each bank may have their own process or documentation that they're requesting in order for them to confirm that forgiveness on behalf of SBA.
Okay, I guess really where I was going is that extra amount then becomes a loan that has to be paid back within 2 years, correct?
Correct.
Yes.
Now, how are you going to pay that back? You probably want to look at your note that you signed and what the payment is and when it's due, because you had 6 months grace anyway from the time that you signed the note. Most of the notes that I've worked with are first payments the first week of November.
Okay. Now, under those eligibility rules for the other, it's mortgage interest, not mortgage payments, but mortgage interest, rent, and utilities. And so another question has always come up of what qualifies as a utility. And if I am self-employed and I'm working out of my home and I use my back bedroom as my office, does that fall under the mortgage interest or the utilities in my home? So I'm thinking that's more of a CPA question. So Adam, what are your thoughts on that?
Well, from the rental side, you're doing home office, I would contend that it would not be. Now, if you had like your mortgage interest, saying, I just think that from a home office, that's just not going to be, because if you had a business and the business had a mortgage, then that I think would make sense. If you tried to say rent, you better have a lease agreement, because I believe the banks are wanting to get a copy of your lease agreement to justify that, yes, I am paying $3,000 a month in a rent, monthly rental for my business. In terms of the utilities, you can also I'm telling our clients we will include internet. So in the Jacksonville area, that's most likely is Comcast or AT&T. I also include what your phone service is. So I would contend that if your business, would be your cell phone. There are some phone apps that are used. You have internet, you have utilities. I know there was a question about sales tax. Florida is unique in that our commercial leases have sales tax associated with it. That is a cost of your rent. So I would include that. One of the things, in my opinion, what I've done to my clients is you've borrowed the money. You're going to spend this for your business. These expenditures that you are doing, I mean, you're going to pay the rent no matter what, if you got the loan or not. You're going to pay internet. So this might be a little crass. I'd throw everything out there and say, here's all my stuff. The worst thing that happens is guidance comes back and they specifically disallow, let's say, for an example, internet service. They say, well, that's really not a utility. I doubt that would be the case. Okay, what's the big deal? I mean, I don't think we have to cry and boo-hoo because all of a sudden they disallowed an expense. You're going to pay that anyway. It's just that whether it got forgiven or not. Where you don't want to get stuck in a situation is go make an expenditure saying, oh, I expect that to be forgiven, and it's not forgiven, and you shouldn't have made that expenditure in the first place. But these expenses are already there. You're paying the lease, you're paying the employees. So, my opinion, throw everything up against the wall, see what sticks, because we are getting guidelines. I think you do yourself a disservice if you say, oh, well, I heard hearsay that telephone is not a utility. That's not a valid expense. I'd at least put it out there, and the banks are going to get some guidance. We're all going to get guidance and say, well, what's allowed?
Yeah,
we would answer that the internet and the telephone bill and any services that the business needs to function would be counted towards that utility.
Okay.
Whether it's your internet service for the business, your telephone for the business, and
Right.
things like that. So that wouldn't be a problem. When you mentioned the self-employed you still have to go back to how they applied too. Some of those 1099s and self-employed use their Schedule C. And if they work from home, their loan amount was net on the net amount to get to that average payroll. It wasn't on the gross amount. So technically that home space won't even come into play because the loan amount's not large enough.
Yeah, they're not going to have the money. Exactly.
Yeah, another question that seems to come up a lot is with regard to self-employed folks, folks getting 1099s. We'll use a beauty salon as an example. Does the salon owner apply for PPP funds, yet all of the stylists are 1099s? Can the 1099 person apply on their own? If you're a consultant or whatever, how do you account for what's salary? So I guess that's probably any of you could weigh in on that.
Okay, the payments, let's start with the basic. The payments to a 1099, let's go with the salon, and not the one in Dallas. If you make a payment to a 1099, that is not a payroll cost. So if you're a business owner and you make a payment, so I own a salon and I make a payment of X amount to a salon stylist as a 1099, that is not my payroll. Because the assumption is that salon person, being a business owner, him or herself, is supposed to go apply for their own PPP. So that's step one to consider, that payments to other 1099 people, you have to have your own, they have to be bona fide payroll.
W-2s.
W-2s, yes.
Okay.
I agree.
Janine, what are your thoughts?
Yeah, I agree the same because during the original application, you have to back out your 1099s that can't be in your payroll. That's an other expense for the business. And then all 1099 individuals can apply for a PPP. They're all eligible to apply.
Okay. One of the questions comes in between whether you're a sole proprietor or maybe you're just a one-member LLC, and how do you calculate those salary amounts for that 8-week period, if you haven't been, paying yourself as an employee on a W-2. So any thoughts on that, Adam?
Okay, if you're a sole proprietor or what we call a Schedule C, so you're not you're not a corporation. You can be an LLC, but if you're filing a corporate return, you should be an employee of that entity, even if you're the sole owner. So we're talking the sole proprietor that files a Schedule C on their personal tax return. The amount that they pay themselves, and the way they normally take money out of a business like that is they should be writing a check out of their business account or wherever the funds that came in for this PPP loan, and write it payable to them. So it's payable to Jane Smith, $3,000, and that's her payroll to herself. The thing you have to be careful of is we don't want to go over. You cannot pay anybody, including yourself as an owner, over $100,000 annualized. Okay, that doesn't mean paying someone $100,000 over 8 weeks. That's an amount that would annualize. So the amounts are, if you pay somebody weekly, you can't pay them more than $1,923. Only that up to that amount is forgivable. You can pay someone $200,000 annualized, but only 100 of it is calculated in the forgiveness. If you pay someone bi-weekly, the most you can pay them for the amount to be forgiven is $3,845. Monthly would be $8,333. So you need to be careful. Now, some people have gotten confused. It says, oh, I have an employee that makes $200,000. They're excluded. No. It's just any salary above on an annualized basis of 100,000. So that's key, because I've had some people excluding people altogether, and that's doing yourself a disservice.
Okay.
Yeah, it's capped. That was a confusing point at the beginning of the applications as well, but it's just capped.
Right.
Well, and I guess as long as we're talking payroll, frequently questions will come up. A situation like perhaps a restaurant or something that was shut down, and now they're sort of gearing back up a little bit, or maybe they've had some of their employees that have worked part-time, but their hours are considerably less because, it was a takeout type of a business. So the question then becomes, okay, now we've got our PPP money. Can I make up, their lower payroll that they got for the 2 to 4 weeks or whatever prior to this? Can I give bonuses now within this 8-week period, or can I pay hazard pay, or can I pay commissions? In other words, it's sort of we couldn't pay them very much the last 3-4 weeks. Now we want to try to balance it out. Can we overpay them in this 8-week period and use that as a way to meet our 75% goal? So I'm not sure if that's a legal, accounting, or banking question. So I'm going to ask all of you to weigh in on that.
Or Lori, do you want to answer?
I'm not sure any of us know the answer to that until this guidance comes out. I think, I've heard both sides. I've heard people saying, the conservative side is do what you've always done, because anything out of the ordinary is going to be questioned. So if you do something out of the ordinary, like pay a bonus or suddenly increase, that's going to be looked at or has the potential to be flagged and looked at. And then I hear the other flip side was, well, if you just delayed payment to some of these employees, for example, like let's say that, in March, you didn't furlough them, but perhaps you just reduced their pay or said, can I pay you next month, or however you did it, and you still owe them, you just want to pay them in April. That might be a different scenario where it's just a debt that's owed to the employee, basically, because you couldn't pay them before, but now you can. They've already done the work. They didn't get paid then, so you want to pay them now. I think that's closer to the line. I'm not sure that still would fly, because again, I'm hearing that, there's two interpretations. It has to accrue during the 8-week period and be due. So in other words, your obligation comes up in the 8-week period, and then you have to pay in the 8-week period. And I'm not sure where where the where that 8-week period comes into play, or where the SBA is going to come down on that answer. So I would say, and I know that there are a lot of people, maybe on this call that, you're probably already halfway through your 8-week period. If you were one of the early people to receive the PPP money, you could be 3 or 4 weeks through already, and you're really kind of getting down to the wire to spend your money. There's unfortunately not a whole lot of definitive guidance from us, other than the fact that, justify what you do. Don't make any big sudden moves that can't be, justified as reasonable.
Yeah, the aggressive side, or the very far side, would be what they said was payroll can't exceed $100,000 on an annualized basis. And back to what you said, Nancy, I think the intent of this, especially if people were put on reduced pay, that if the employers are coming back and trying to make the employees whole, to say, well, we put you on 50%, now we're going to come back and pay you to catch you back up, and you're still staying under an annualized $100,000 a year, which I think in most cases it would be. I just find that was the intent. The whole goal of this was to keep people, as the federal government used the vehicle of businesses to keep people paid, and to try to, during this, to make them as whole as possible. So I think to come back and chastise and say, well, you put these people and now you're trying to catch up their pay, and that's not allowed. Now, granted, if you try to pay them, once again, over the $100,000 annualized amount, that's where you'd run into a ticket. There was nothing that stated how the pay is. I mean, you have people that work, in sales that you get a very low weekly salary or biweekly, and they get this huge bonus. It's called a bonus. It's a commission that occurs at the end of the month. Are you going to disqualify that? And they can only be paid $200 a week, and they get a $5,000 bonus at the end of the month. And say, well, it's bonus, and that's specifically, because I don't see anything that says bonus is disallowed. I've heard some people talk about hazard pay. Well, what is hazard pay? You can say, well, is hazard pay being a fireman or working at a hospital? Is that hazard pay because you work with COVID-19? Or is now hazard pay a waitress that needs to now serve in this environment? Because you're the frontline person in public, is your frontline person now that hazard pay because the assumption is you're there, whereas someone who's working in the back of the restaurant, it's not hazard pay because they're not around the public. So there was no definition of hazard pay either.
Yeah, I'm kind of thinking that's a little bit far-fetched.
None of this has been specific.
Go ahead, Janine.
None of this has specifically been covered to that level or detail. I know those are common questions. I think the focus still has to remain on the amount of payroll that can be processed. And they are going to be looking at the total number of employees on your application when you averaged it. That will probably be a reference point back. And then they're going to gather payroll records and then the other documentation for you to certify. So the certification is still heavily weighted. And then we wait for the guidance.
And I think,
go ahead,
Nancy, if I could just jump in here real quick, and a thought occurs to me. We're saying we don't really understand how these questions are going to be answered definitively. And I think that even when the guidance comes out, there's still going to be questions. And I think at some point, you can't come up with a rule. The SBA can't come up with this national rule that is going to be able to fit every single circumstance, right? Because the hazard pay situation, perfect example, or the employee that's on sales commissions and doesn't make any sales but if you take a 12-month rolling average, they would have been due a payment. I think all those situations are really going to be, in my opinion, are going to come down to the bank, because the bank is the one that's going to be taking the information in order to be saying, yes, this is certified to be forgiven. And I think they're going to be using the SBA guidelines, as general as they may end up being, who knows. But then each individual bank makes its own decision as to what's going to be forgiven or not, because then they have to turn around and send it to the SBA to get the money from the SBA, and then they process that. So each bank is really going to be left as the quote unquote decision maker in some of these circumstances. And I think, bank to bank, they may be making two different decisions on the same set of facts, just because that's how the bank makes the decision. And from everything that I'm hearing, that's how this was set up to be done, is that each bank makes its own decision and has that type of discretion.
But at the same time, Lori, the bank is just confirming the information that was provided and certified by the borrower. It doesn't mean that we're digging that detail into like the payroll record to see what the dollar for dollar comparison is. We don't, and I don't think any bank has the labor to actually go to that depth. So they're counting on the records, the certification, and processing a timely request. What we provide to SBA in the end is a form and a bulk list of loans, not a loan by loan. SBA will be scrutinizing certain loans on the very large side, over $2 million, and maybe a random sampling, but they're not even reviewing every single loan. It's on the certifications that they are relying on the client to provide the records and certify.
Janine, go ahead,
I do
Lori.
think that people, I'm sorry, and I agree with you 100%, Janine, and I do think that with people listening to that, I don't want anybody to interpret that to mean that you can kind of be loosey-goosey with this, that no one's going to be looking at it.
No.
Because
someone is going to re-review it. Yeah.
Yeah, so the banks are going to be seeing this on some level, and different banks could go, deeper than others. You're really not sure how the banks are going to be processing that, and I'm not sure they know how they're going to be processing that. But I don't want anybody to think that you can be kind of willy-nilly with the spending and say, oh, if I get asked about it later, I'll come up with you need to be having your records in place right now with how you're justifying those expenses if you were to be asked. And then you don't have to worry about it if somebody does come along and questions it.
Right. Let's talk a little bit about head count, and because in order to get the loan forgiven, it's more than just the 75% payroll, 25% allowable expenses. You have to have the head count that you had when you applied for the loan. So Janine, would you address the head count in this, because some people are going to have full-time employees, some people are going to have part-time employees. What constitutes an FTE, a full-time employee, and also the wiggle room between, your 8-week period starts when those funds are deposited in your business account. But then there's also this magic date of June 30th. And how, there's some confusion around that, because what if your 8 weeks ends before June 30th, or, your 8 weeks goes maybe a little after June 30th. So could you talk about that for a minute, please?
Yeah, that's definitely an interesting topic. The guidance that we have now and that was put out with the original program says that your forgiveness would be reduced if you decreased your full-time head count. It also says that rehiring, you have until June 30th to restore your full-time employment and salary levels between February 15th and April 26th. And now I've seen June 30th when the program ends. But there's still room in here for controversy until that interim final rule comes out. In my opinion, it's going to be difficult.
Okay. But I guess the question is if, let's look at another situation. You had to shut down, your business had to shut down. So you furloughed your employees, or you put them on partial payroll or whatever. But they physically did not come to work because you were shut down. So now you're reopening, whether you're on the staggered plan or whatever. So now you're reopening and you're wanting your employees to come back to work. So, okay, I had 10 employees and it's time to get back in the saddle, gang. But the employee then decides, well, they don't want to come back to work. Do you still have to pay them? Do you, if they're, have had business owners say, well, you know, they're not physically here doing work, so I don't feel like I need to pay them. But at the same time, you know, the idea of this plan was to keep people off unemployment. And then now that we're starting to reopen and I want my people to come back, they aren't that interested. They're making more money on unemployment. So, Gloria, I think maybe we can address that one to you, being a little bit probably on the legal side of things.
Yeah, and I think, you know, first of all, if you tell an employee come back to work and they refuse to do it, then they don't count in your number of full-time equivalent employees for that forgiveness reduction. So what I'm saying is, an example would be if you had 5 before, and now you've got 2, and you want to ask, you know, 1 of them or 2 of them or 3 of them to come back to work so that you can get back up to your 5 by June 30th, and 1 of them says, I'm not coming back in, now you just have to be, you're down to 4. So basically they won't count the employees who refuse to come back, which is fair, because you don't want to get penalized if somebody's refusing to come. And what I'm seeing now is that, you know, with some restaurants, there are some, you know, they're opening back up, and other types of businesses like that, the employees don't want to come back in because they don't want to have that personal contact. And so that is a real legitimate situation, and just to know that you won't be penalized. Now, whether you still have to pay them or not, I haven't heard that question or not, because if they're refusing to work, then you don't pay them. You know, and it depends a lot how you've counted them. So if you furloughed them versus if you've just kind of reduced their time and their hours, I mean, you always have to pay somebody for the time that they're working, or you always have to pay somebody for the arrangement, the employment arrangement that you have with them. And those are, in this day right now, there are some really creative employment arrangements that I'm seeing. I see new ones all the time, and how you kind of structure that. So just to say that with the PPP program, which is the topic of this, you will not be penalized if you have an employee that doesn't want to come back to work.
Okay. Now, here's another question. What if you bring your employees back to work and you're paying them with PPP money, but yet they're still collecting unemployment? You know, that's not good.
Well, they wouldn't.
Well, that's really on the employee.
Yeah, well, exactly. Yeah, okay.
That's
All
on the
right.
employee. That's fraud. That's fraud on the individual employee. So that's not a business issue.
Okay. All right. Well,
you wouldn't be able to come back. When you bring them back to work, they're expected to terminate their unemployment compensation.
Yeah. Let's talk about documentation, because that comes up a lot for the forgiveness portion of the loan. So what documents do people need to keep? Do they need to open a separate bank account so that, you know, this PPP money is away from everything else, and they may be easier to document how it's spent? What sort of documentation? And I realize SBA guidelines are not out yet on this, so we have to kind of go with, okay, what we know now. All that could change by Monday or next week. So based on what we know now, what's the suggestion as to how does the business owner monitor this so that they're making sure they have the right documents to be able to apply for forgiveness?
I mean, I can take that if you want, because we know pretty clearly SBA is a monitored, managed loan, and this is the platform it's coming back through for the PPP. And we do have guidance saying that for your forgiveness, you should have your payroll tax filings, like your 941s, your canceled checks, and either payment documentation, invoices to back it up. Most banks that I'm familiar with put the money into a designated account, whether it's their operating account or a separate account, or they established an account. And it's much easier for the client if they manage out of that account, because then that bank can see those statements. But not everybody could facilitate that, I'm sure, but that's more ideal.
Okay. Adam, you want to talk about record keeping?
Well, I've heard that and saying, oh, you need to put the funds in a separate account. Let's walk through that example. Okay, I put my $100,000 in a separate account. I process my payroll through a payroll service such as ADP or Paychecks. Payroll cash requirement, $25,000 goes out the door because that's your covering payroll. And you say, okay, I'm going to move $25,000 out of my PPP bank account and say, there's $25,000. And you know what I'm going to say? You're wrong. Because one of the components of your payroll that's not forgiven is the Social Security tax cost to the employer. So right then and there, that in reality of that $25,000 in payroll that goes out the door, there's probably about $4,000 or $5,000 that is not an eligible forgivable payroll expense, which is the Social Security taxes. So what you really have to do is you have to go to another account and have that money go to ADP. So it just doesn't work when in real life, that's not the way it works. If you use a payroll service, they take the money out of a checking account. Yeah, it's really easy. So it's also the other thing, you're going to pay the rent that month. So now you have to go get checks out of the new bank account, the PP, to write the check out of that account. I mean, it just gets sort of awkward. I think if you have an accounting system that says, here's my payroll, the payroll reports either from QuickBooks, Paychecks, or ADP, or even a PEO. PEOs, you're allowed to have those organizations to handle your payroll. That covers the payroll cost. When you're paying rent, how about this? A lot of people pay, and I'm one of them, your utilities is paid out of your main checking account electronically. So are you going to now call up and say, oh no, JEA, move it over to this account for the next 2 months and then move it back? I think there's just a cumbersome aspect to that. And once again, it's not all your payroll costs. The payroll, the Social Security expenses that are paid by the employer are not an eligible payroll cost to be forgiven, and that's forgotten in that scenario. So I think if you just have good documentation and accounting software like QuickBooks does it pretty well.
Okay.
But it is going to require the backup documentation, is what we've been told.
Oh, no doubt about it. Just like if you were being audited by the IRS, you want to have documentation to justify your payroll expense, your rent expense, your telephone expense, all that's still going to be there. But I did not see any that mandated a separate bank account. Some people like to do that. What it also, though, some clients, it helps them. They get their $150,000 and then they say, well, okay, I'm using it for legitimate cost. And when I run to the end of the 8-week period, they now say, I've got $30,000 left in this account. That's sort of a clue then they're going to owe that back. Whereas if you just dump it in with everything else, you could get, the client could get lost, and then all of a sudden it's a big shock when the bank says, okay, you owe $30,000 that you're going to pay over an 18-month period, and that can be a little, that's a heck of a car payment.
Adam, is the PPP money, will people have to pay taxes on it on their 2020 tax return?
Okay, that's a good one, because initially, the money that you get as this loan that you get from your bank is not taxable, okay? So you're not going to say, if you get $100,000, you don't pay tax, you don't not pay that as taxable income, even if it's all forgiven. So let's just go with that scenario right now. Then the question, though, is if I use $100,000 of this PPP and I use it all on payroll, let's just keep the story simple, which you can do, okay? You can, if you get $100,000, you can spend 100% of it on payroll. Some people think I can only spend 75%. It's a minimum of 75%. But let's just say we spend $100,000. The United States Treasury will say that if you spent $100,000 of your PPP on payroll, and let's use an example that my payroll was $1 million for the year, gross number. I used $100,000 of it. I got a PPP loan for $100,000. So now the IRS is going to say you don't get to deduct the full $1 million in payroll that you had for the entire year. You only get to deduct $900,000 because this PPP loan was $100,000 covered that expense. So you can only deduct $900,000. However, Congress has challenged that, and yesterday Senator Rubio was in a town hall meeting, including the CPAs and others, saying that they wanted to make it deductible so that if you get a $100,000 loan and you use it for payroll and you had $1 million in payroll, you get to deduct a full $1 million in payroll. That was the intent of Congress. The IRS is saying, no, you can't double dip in a sense. So that's an interesting showdown that's occurring. That is huge. If you get $100,000 and you have a tax rate of 20%, that's going to save you another $20,000 in taxes. This is big numbers. And it's interesting that Congress is saying it is deductible, and the IRS is saying, no, you can't take that deduction. So that debate is still going on. And but the IRS always wants to make sure everything's taxable and nothing's deductible. That's always their rule.
Yeah, I've been getting some questions here, so I want to do a little clarification. So it's my understanding, correct me if I'm wrong here, guys, it's my understanding that whatever is included in the normal payroll for an employee, whether it's insurance, retirement benefits, etc., that you take that gross amount less Social Security, Medicare, and federal taxes. Is that correct? You count that amount?
It's the gross wages, okay? So if you pay someone $1,000 a week and they have $100 deducted for health insurance, that doesn't count. You don't take $900. It's the $1,000 of gross wages is what is the forgiven amount, okay? The health insurance is that $100 that's deducted from the health insurance. That's when you're calculating the employer's net health insurance cost. So it's $1,000. The Social Security tax that the employer pays or gets deducted from the employee, those don't count at all. The only thing that my understanding that is a deductible expense is state and local taxes charged based on compensation. Now here in Florida, the only thing we have is state unemployment tax, which is assessed on employee, the first 7,000. So that's a fairly small number. But in other states, they seem to be saying that if the employer, and like in some states they pay, like California has a variety of taxes that the employer pays that are based on income, and that would be a deductible expense. But most of our clients are Florida clients, so we don't have that circumstance. But it's gross wages, not the net pay. And some people get confused about that too.
So I think the best advice here is if you've got PPP money and you're getting ready to do your 2020 taxes, talk to your accountant, right? Get clearing on the accountant. We are almost out of time, and there's the questions just keep rolling in. I'm been trying to keep up with them and make sure we cover some of the territory. One of the question, is there any problem increasing the hours of a part-time employee to get you up to that 75% payroll? And I think we said earlier that that's not a problem, correct?
As long as you keep them under an annualized 100,000 and you wanted to pay, and you were going to pay them that anyway, I think you might be prepared if you start pushing it too much, that you could say, okay, the bank comes back and slaps your hand and says, well, I know you paid them this extra $1,000, but guidance from the SBA says you can't do that, or it's not going to be forgiven. So then you say, okay, I paid the employee more than I should have. It's not forgiven. I'll pay it back to the bank. When it comes to paying the employees and you're trying to make them, catch them up for a year, I just don't think the SBA is going to come down hard, because the whole goal was to get this money out to your employees, and that's the real intent. Now, if you're trying to abuse it and you hire 13 of your family members just to pay them, I think that then they didn't work for your business the week before. I think that's a problem, because that looks rather self-serving.
Okay. Janine, you want to talk briefly about how people can pay back, any of the funds that they don't use?
Well, when you're finished and the bank has processed your forgiveness, you'll have to get a payoff request. Part of that payoff would probably come from the government directly to the bank, and that would adjust that payoff. Then you'd have the difference, whether it's used or unused funds to pay off or pay in payments as agreed per the note.
Okay. All right, so we're almost out of time. So I'm going to go right around the panel here. Start with Lori. Do you have any final comments that you'd like to share?
I think for me, I want people to understand that even though there's not a whole lot of definitive answers right now, you can keep yourself in the clear by taking reasonable steps. And if you feel like you're trying to get around something, then I would question, whether or not that's going to work. But if you're just straightforward, straight shooter, and you just want to keep track of all your expenses and keep all your documents, then you're not going to have anything to worry about. If you start doing this unusual type of spending, then I think you're starting to get yourself in the gray area, and depending on your level of willing risk, then you take whatever risks you want to go into if you go into that gray area. And obviously the red area is something we didn't really talk about too much, which that is, if you don't use any of this money on your payroll or on these covered expenses, then you're in the area of fraud, and that area is red zone that you don't want to find yourself in. So, definitely keep yourself in the green area if you can. The gray area, I'm not too sure about, but everybody has their own, opinions on that. So tread carefully.
Okay. Adam, any final comments?
Sort of saying the same as Lori, just make sure you document what you got spending. But at the same point, the worst thing that happens is, like I said, if there's questionable costs, we'll get guidance. Your bank is going to know, and they're going to submit it to the SBA. And if they come back and say that's not allowed, okay, then that wasn't allowed, and you just pay the money back. It's a 1% interest rate. It's a 2-year note with the first 6 months grace period. That's, even today, that's still a pretty cheap, relatively inexpensive. Just be prepared to pay it back.
Okay. Janine, any final comments?
No, there's just constant information still coming out. I would recommend that if they can communicate with their bank for any specific questions, if they get into anything other than that was originally published and that we talked about today, anyone can look at the SBA.gov website and see the frequently asked questions posted, and the Treasury website. And there's a lot of information out there. Most of the time, if you just click on the coronavirus or COVID and details for customers, there's a wealth of information that continues to stay out there, and we get daily updates. So it is evolving. I know that that's been difficult for everyone, and just hopefully your banks are all working with you. And, we're doing the same in SBDC and SBRN, trying to support you through this.
Okay. So I want to thank our panelists for being here and sharing the information. Thank you in the audience for coming. As things change, if we have some good information to share, we'll do another webinar. The one last question here. So we're able to use 100% for payroll expenses since we don't have rent, mortgage, etc. Yes, you can.
Yes.
Yes, you can.
Absolutely.
You can get that forgivable if you use it at 100%. So once again, thank you everybody for participating. It's a little bit of a roller coaster ride. Let's just see what happens over the next week, okay? So y'all have a great weekend, and thank you once again.
Thank you, Nancy.
Okay.